right. Show in private because this is going to go out, I think, about a day from now. So work with me, everybody. I'm welcoming you. You're not exactly live, but I'm broadcasting live to YouTube to do this special edition of the podcast today. So welcome to the Baked and Awake channel. I'm excited to be joined by a guest today who I'm going to bring on to camera here in just a moment. A local colleague and friend of mine, Josh Kincade, who is just a staple in the local cannabis business community here in our legal market here in Washington State. He's a general business analyst, but focuses strongly on our legal market space and the futures for legal cannabis markets moving forward in North America and the world. I've benefited from his analysis on topics in the past here on the show that pertain to all of us. And as you can tell, hopefully, if you've clicked on this video from the thumbnail and with the description for it, you know we're going to talk today about the very interesting recent events in terms of the Wall Street Bets subreddit, the GameStop headlines that you've all been seeing all over the internet in recent days. Josh has great personal insight to bring to this, and I've already had him on the line for quite a while. We've been chatting it up, getting ready to have our online, our stream here together. So a lot of great conversation has already taken place, and we're hoping to now, capture that and bring it to you guys in a interesting format. So hopefully a few of you who haven't been paying as close of attention to this will find this interesting and fun. I'm going to bring Josh on now and welcome him to the show. Josh, how are you, bud? You still hearing me just fine? You didn't go far, so we're still good?
Still here, yeah.
Audio and video, brilliant. All right, StreamYard works really well, so no complaints there from this little tool. Welcome. Thank you for spending this time with me this afternoon. We're both on our Saturday afternoon, so I'm sure you've got plenty of other things you could be doing today as well. But thanks for hanging out with me for a while.
Yeah, thanks for having
all of us. So let me just bring up my little welcome card for everybody, so they can see your channel and get that up. Where are you? Now everything went away. Boom. There we go. So just to read that for everybody, Josh is a capital markets analyst. I characterize him as a financial advisor, and that's probably not, nearly colorful enough or fair to what you spend most of your time on and your headspace in. But your company is Superchronics. And you are currently based at the Global Trade Logistics Center down at the World Trade Center, that is in Tacoma. Beautiful building that we've both been to for a couple of events, industry events here in Washington State. So thanks again. Glad to have you. We're talking about GameStop. We've been talking about GameStop with our friends and family for the last couple of weeks. I don't know about you, but I've been texting with my brother, former, mortgage guy back in the Countrywide days, who's been out of that industry for a while now, but who, of course, still pays close attention to the investment markets in the country. He actually lives in Japan, my brother. But he's, tracking on all of this. I mean, the first mention I sent him of Wall Street Bets, he was like, I'm all over it, bro. He was all over it. And when I got on the phone with him, Josh, I didn't have to talk for 2 hours. He just chewed my ear off about this, which further cemented my motivation to go ahead and have a chat, and bring in somebody like you and just talk about it. Because for one thing, while I don't ever fancy myself a savvy investor, I'm not a particularly financially successful guy. we get by in life and we have our little savings and our little retirements, but I've not been super diverse. I've not been super proactive. And I certainly haven't spent a lot of energy in, blue chip stocks or stock market type investment as a big part of, my personal plan for the future, my whole adult life, and it's probably much to my detriment. Right. I've got to say, in the last few weeks, I hope I'm not alone in this either, and I don't think I am at all. I've felt a renewed interest in participating in that type of proactive investing and planning for my future, partially because of the excitement that I felt when I first discovered the Wall Street Bets subreddit itself. I became aware of the subreddit personally, and I was telling you this, almost simultaneously was seeing the first news stories pushing out of the subreddit, like cross posts from other, communities, or a headline on one of my nerdier news sites that I'll follow, Slashdot or something like that. I already spend a lot of time on Reddit anyway. It's, one of my last bastions of like I don't know if Reddit qualifies as a social media site as much as it's like a little bit more of a last generation internet forum type model, is the way I think of it as. I don't think of it as much as of a social site as a Facebook might be, for instance. But I visited the subreddit almost as quickly as I read any stories about the subreddit. So I instantly picked up on a couple of things, Josh. Like, you'll think and feel one thing about Wall Street Bets if you discover Wall Street Bets in the subreddit and read some posts from people in there. You'll think another thing entirely about what's going on, who constitutes the members of that community, everything else about it, if you are reading the Wall Street Journal or a Bloomberg piece or a HuffPost piece on this. We've heard narratives and characterizations of the members of the Wall Street Bets community that ranged from, white supremacist, sexist, ableist, very not politically correct, very potentially cancel worthy, deplatform worthy type of, unmentionable type people, is how these people were initially characterized. It was like the first thing out of the gate was this. There were words and labels that were bandied about by a few members of the subreddit with one another in again, if you were a person to actually go to the subreddit and spend a little time in there, it was fairly dripping with irony. This was an ironic attitude and adoption of some colorful and fairly insensitive seeming labels that were being self-ascribed, by these people to themselves and to one another in solidarity of the seeming silliness of their moves, of the bets that were being placed in Wall Street Bets. And those bets, of course, are, for those of you following at home who, may not be fully aware of this, the Wall Street Bets community has been around for a few years. It was a fairly healthy subreddit of a few 100,000 members up until just a few months ago. 5 months ago or so, that subreddit started to coalesce together for the first time, perhaps in a more meaningful way, having identified a few key stocks that they liked. As they said, they liked the stock. Why would they like certain stocks? Josh, you would perhaps agree with me. Almost every stock that's been talked about in the news over the past few days, the GMEs, the AMCs, the BBs, BlackBerry Corporation, the Nokias, are all companies that are underdogs in the market right now, both figuratively and very legitimately on paper. They've been looked at and judged and found wanting for some time now by the bigger players in the Wall Street world. They have been, as we've come to learn, leveraged or bought up by people taking positions that are known as shorts, right? Short positions on a GameStop or an AMC. GameStop being the biggest victim of this, both from a standpoint perhaps of its potential value, if it could be turned around, but also of its the greed that was exhibited by the hedge funds, which took a stock that they could have shorted to the effect of 50% of their open available shares on the market, or even 70 or 80%, which would have been incredibly aggressive. But as I understand it, each time the stock went down to new lows, these hedge funds went back and closed their old positions, bought all new ones, and shorted them all over again, even harder, to the point where the value of the short positions exceeded the value of the real existing stock of GameStop in the world, right? They were at over 100% of the proposed value of the company on paper anyway. Am I understanding that at all correctly there? I've been doing a lot of talking so far, and really I'm mostly setting you up to start to be able to take the lead for us here. As a layperson, though, this is what I've seen so far sort of unfold. We know that, as we said, this started on Reddit largely. I think there's a lot of people who have read about it since then and who still have never made it to Wall Street Bets, but who might have downloaded a investment app in the last week that they didn't have before, or 2 weeks that they didn't have before, and maybe said, well, I'm gonna get in on this fun just for the heck of it myself. So it started in Reddit, but I don't think it's contained to Reddit anymore, right? What do you think? Have I done any justice to the situation leading up to this? I mean, guys, the big point of this is that I just popped up a caption at the bottom of the screen here. Those members of that subreddit, which, by the way, as of this morning, is at like almost 9 million members now. When I found it 3 weeks ago, they were under 3 million members. They were at like 2.3. I watched it jump almost 1 million members in 1 week. And now you can't even count. It's another, several million more people have joined this subreddit. This subreddit was nearly kicked off of Reddit. It turns out they stopped short of doing that. They had a Discord server that was briefly shut down. Discord then backtracked and opened it back up after a lot of outcry from people. I feel like the complaints of the character assassination, or like sort of slandering that was going on of like the whole population that was going on early, that settled down and gave way to a different attack, which was more sustainable, which is these are unsavvy retail investors who are all going to lose everything if we don't, explain to them, market-splain to them why they shouldn't be doing what they're doing, right? You guys should why don't you take some of that money and donate it to somebody who really hasn't had anything this whole time instead? Why don't you take that money and spend it at your local businesses and support them instead so they can stay in business instead of going, right? So there's a lot of what I'm hearing. But the stat at the bottom of the screen right now is at the crux of all this. These people in this subreddit identified what they saw to be egregious types of manipulation of a company, a surefire way to bankrupt a company, put thousands of people out of jobs, and a nostalgic brand that represented something to a lot of these people's youths, in a way prematurely perhaps than it would have otherwise had to have ended. And so GameStop became a rallying point for these investors in what some are characterizing as an organic and natural grassroots type movement, and others are not sure isn't just another brand of market manipulation, not unlike what might happen from the more established side of this equation, the guys who are going to be in trouble when GameStop rallies to $347 a share, up from as low as $2.80 per share in April of last year.
Yeah, basically
lost, right? People did lose. These hedge funds did lose some money.
$70 billion.
$70 billion. Does that matter to them, Josh? Is that really enough?
No, because they were able to go out and get more billions right after that. So this buy and hold thing doesn't really matter because there's not enough money from these Reddit users in order to hold off these short sellers. So when you have 140% short to GameStop or AMC, then all of a sudden you're going to have sophisticated investors kind of coming together and looking at opportunities to squeeze out a short seller because they're going to have to cover their positions, which then has a short squeeze and then drives the price up as the big. So what you're seeing is every month new options come out and they're buying these options. And so you're having this trail of shorting. And Reddit users were noticing that, last year. And so I think in September is when they were really kind of piling in on that trade. So that's been taking months now. And then finally it was on CNBC, and I was surprised they took an entire day to talk about it, but it was because it was so disruptive to their normal business. It wasn't business as usual. And I was loving it. It was great. And you had a lot of people throwing back at them to say, this isn't just they called them retards. This isn't just some unsophisticated people out there. These are people that really understand technical analysis. They have charts. There is technology. And these old, crusty people in Wall Street don't understand that people are day trading. And yes, they might be the stymie checks and everything that they're criticizing, but they're killing it on crypto and other investments. And yes, they are gambling, but that's a whole nother fundamental reason. There's not really anywhere else to go. So yeah, people are broke and they're going to just gamble. It is a form of gambling. And
so to reiterate your point, though, you agree as again, not in my case, definitely not a financial advisor, and nobody should take any of this conversation as, financial advice of any kind.
Right.
We're exploring a space right now, but I also saw thoughtful posts by people who might start out with some hilarity at the top of their post to grab the members of the subreddit's attention. It's a busy subreddit. You got to craft a great post to have it, be upvoted and stay competitive at the front of that subreddit and have people potentially think about what you said and then potentially go back and do their own due diligence and make a move of their own informed decision from it. I saw lots of posts like that really felt like they were helping me ramp up my level of understanding of what was going on, the reasons why things looked the way they looked optics wise, and why that was in part by design to an extent. Like, that's a great way of obfuscating who you really are, how serious you really are, bandy about the R word, call each other autistic, say ridiculous things that do make some people kind of turn away and go, you know what, I don't even need to hang out with those folks. I don't know what they're about, but whatever. But that may serve as a filter to some folks to let them get to, okay, you made it past that. Are you ready to learn what we're really doing here? You ready to learn how to yeet the rich? You know what I mean? Let's go, right? There's a couple different things happening at the same time, the way I see it. And maybe, you can tell me if you agree or not, Josh. I feel like there's never been a mutually exclusive type of dichotomy existing between Wall Street bets, speculators, retail investors who are part of that community or movement, as I've already begun to characterize it. And again, I say it's gone past the subreddit now. It's in the public zeitgeist now. All right. There's going to be somebody walking the streets in New York by this week wearing a Wall Street Bets emblazoned t-shirt that doesn't have a dime in the market and has never invested a dime in the market and isn't going to be in a position to do so for 20 more years, even if they are, but they're going to have that t-shirt. You know what I mean? Like it's a done deal. And so to my mind, I already saw this though. I saw people who were YOLOing their savings into an untenable position in GME near the top, having read all the threads, knowing that they were going to get tanked, knowing that some action was going to be taken at some point to stop the upward movement. They didn't know what it was going to be. They were waiting for it, though. They were talking about it. They're like, this is not going to be allowed to stand. What happens? We go up above $350, $347. I think for brief milliseconds, it was trading close to 400 there at the end before what happened? Robinhood, one of the biggest traders powering the retail investor attack here, limits trading. Doesn't limit trading. I'm sorry. They shut down sales of those stocks, or purchasing of those stocks by the retail investor, effectively completely stopping all ability for the meme magic squad in Wall Street Bets to keep pushing things upward. All of a sudden, they went from being able to buy stock with their money, a little money or a lot of money, to not being able to buy. They could sell, but they couldn't buy. Webull, another popular app, investment app, same deal. eToro, another popular investment app, same deal. Bigger brokerages, bigger trading houses, we come to understand in succeeding days, didn't suffer from those same problems. And many people came to understand very quickly that what they learned about their Robinhoods and about their eToros, etc., is that they themselves are kind of just a little name brand front, a partner to somebody else who really has the deep pockets that gave them a fat credit limit of some kind to stand up their business and get started in the first place. But that credit limit was long since exceeded by the time people were increasing the market cap of GameStop to the tune of billions of dollars. And hedge funds in particular, which are a form of what, Josh? What? Okay, so here's a great question. Who are you if you're a hedge fund? We've got companies on the stock market. You can invest in blue chip companies. You can invest in an Apple or a Tesla or an Amazon or whomever and own shares in that company. You can also, as an individual investor, participate in funds of different kinds, right? And a hedge fund would presumably be something that, can we also buy in? Can I buy Citadel?
No, a hedge fund is an institutional investor, and they have really risky strategies with really high fees. And so a non-accredited investor or somebody who makes less than 200,000 with $1 million liquidity wouldn't be able to invest in such risky stuff because you don't know what you're doing. Okay. You're too uneducated, and they make those decisions for you.
Wow. All right. So we can't play their game, even if we wanted to, from their position or perspective at all. These guys shut down people's ability to buy the stock. It effectively killed the momentum of the GameStop stock. At the same time, they limited trading on several other stocks that hadn't gotten to GameStop proportions yet, but were showing every indication of going that direction, specifically AMC, BlackBerry, Nokia, a couple others that don't come to mind right now, and that also were, distant fourths and fifths in this list right now. Trading has since been opened back up, but in the interim, what sort of happened to the,
let's take a quick step and let's try to explain why it was shut down from their point of view. Yep. And then we'll try to poke holes in that theory. Yep. So when you have an account, you can apply for margin. And so what margin is a line of credit for you to be able to double your purchasing power. Invest 10,000, apply for margin. Now you can buy 20,000 worth of stock. Okay. That has to come from somewhere. So the broker dealer, or in this case, Robinhood, is the one that's lending that out. And so when everyone piles in and they have margin and they're buying this stuff, there's risk to that, right? So they have to kind of plan for that, and they have to buy stock to be able to cover the margin. And for them, it became way too risky. Like their models were just flashing red warning signs, and they were like, okay, cut it off. They can't buy any more of this. We're broke.
Right.
They went out and they got 1 or 1.5 billion in financing in order to shore up their capital.
This is Robinhood specifically, everybody.
Correct.
By the way, we're talking about the Robinhood app and the brokerage behind it, which again was where most of the Wall Street Bets folks were making their moves from, it would seem.
Mm-hmm. Right.
So Robinhood, Vlad, the CEO of Robinhood, went on like CNBC last week, famously kind of ended up looking really poorly, didn't do that great of a job, and it seemed a little disingenuous in that he was more or less asked point blank in that interview by the interviewer, this sounds like a liquidity problem that you had. This sounds as though you had to stop, purchases of that stock for this reason. Is that true? And the CEO, of course, at that moment hadn't raised that additional 1 point whatever billion. Mm-hmm. They undoubtedly were discussing it with whoever they were trying to get through that deal with, right? And maybe that's why he couldn't be as truthful as he wanted to, because he didn't have the money in the bank yet. And he didn't want to talk out of school. Like, let's be real here, everybody. He's trying to keep his company alive, period. But that was an interesting moment for everybody in terms of the investors and understanding how beholden Robinhood apparently was to, a market that still didn't want the retail investor to do what they wanted fully, freely. Right.
That was kind of a historic moment at the same time, because to have individuals collectively coming together and crashing a hedge fund was unprecedented. It hadn't really happened before.
Right.
And they were scared.
Right. We don't have a real precedent for this. Nobody's come together and engaged in financial activism anywhere near on this level.
No, hedge funds have done it to each other. So Bill Ackman got shorted out on a famous play, back in the day when some other people came in to Herbalife. Mm-hmm. Really famous textbook case of being shorted out, because Bill Ackman didn't believe in Herbalife, wanted to short it, and other people were like, it's fine. And then they squeezed him out, and then the stock went skyrocketing. So you see that amongst hedge funds, but this has never happened when individuals were like, you know what, screw those guys, let's buy in and we'll squeeze out their 140% short float. And
so in a sense, they were impersonating a hedgie.
Yeah, exactly.
Collectively, if not formally, kind of embodying it. It was a facsimile of a hedge fund move. It was a move they would have done to each other.
Yes. But they don't like that. When the individual does it, they don't like it.
Why not? What could possibly go wrong?
And everything. And they talked about it for days. It was really fascinating watching them just squirm. They didn't know what to do. And then you had all these other people coming on, like Chamath. He's a Facebook investor and early Google employee. He came on and just roasted Scott from CNBC, who's like, what about the kids? They're gonna lose their money. And Chamath is like, you don't care about them. Let's be real. You're just upset because the system's been disrupted.
I love it.
Brilliant. I loved it. Yeah.
Yeah, we have gotten to see a few people squirm in a few different instances over the last few days. Robinhood CEO didn't look comfortable or stoked at all in that CNBC interview. That's for sure. I think, this, though, begs the question, so we saw this manipulation happen, Josh. We saw this maybe organic, maybe not movement happening in Reddit. And, we characterize it as potentially grassroots activism in some way. At least I certainly am over here on this side of the table. I won't put words in your mouth. Is this a situation where the hedge funds and the SEC and the traditional Wall Street minded economists and analysts, if they're expecting things to go back to normal, are they Dutch girls sticking their fingers in little cracks in the dam, in the dike? Is every GME that they put their finger in and stop that leak, and AMC, and when they got all their fingers everywhere, I mean, at a certain point, are they going to run out of fingers? And at a certain point, are there going to be enough retail investors when Wall Street Bets has gone to 20 million members instead of 9 or 8.7 million where it is today? Will the scales tip a different way eventually? Are we already seeing the birth of a new economy, or is GameStop going out of business anyway? Is AMC going out of business anyway? And do the hedge funds already have the necessary head start, the 100-year plus head start that they've got on the Main Street side of this coin? Or is this going to change?
I don't think that they're going to survive long term, at least not in the name. So GameStop, you can look at the fundamentals, which nobody does. Everyone's just technical traders for like the last 2 decades.
Right,
and
right.
So fundamentally, people are not going into GameStop and buying things. Commercial prices are at all-time highs, and they're paying all-time high for rent to be in those spaces. You compound all of that, and it's just really bad for the bottom line, which is really bad for the stock price. AMC, they haven't been open for over a year, probably won't be open for another year, same issue. A lot of people are not going to go back into a theater and be amongst people because they're scared. They're going to stay at home. You have a Disney Plus and all these other plus things that people are going to purchase. I don't think you're going to see a Disney movie in a theater. They're going to go directly to their Plus channel in a lot of cases. And so AMC is going to suffer as a result, and their revenues are not going to be investable. And so, I think ultimately they're going to struggle. Short sellers were right, but the morality of being able to short 140%, I think derivatives are a financial weapon of mass destruction. I think they should be more heavily regulated. They aren't. I think if you look at Deutsche Bank specifically, they are a bunch of atomic bombs put together based on greed and speculation and lack of financial scrutiny, really. It's pretty scary out there when you dive into derivatives and stock options and what it can do. This is just a very simple case, and I don't think they should have been able to go out and grab 140%, but that's not illegal to do.
Right. So we can agree that, we feel like the ethics of shorting a company way beyond their actual value and like aggressively cratering them into the ground is probably something that's, ripe for opportunity for reform, kind of an objectionable economic tactic. However, is it ridiculous to imagine, and maybe you can tell me if there's just any historical precedent for this anyway, whenever a company has been pumped by market forces, by advocates, analysts, pundits, rumor, chicanery, but they have been pumped for whatever reason, and their stock balloons by 30%, 40%, 100%. They've got billions of valuation, and it wasn't at the GameStop level, so it was allowed to go for longer. If you're the CEO of that company and your stock was worth squidly this time last year, and you were looking at the chop and your golden parachute, where you were going to go next, but something changed. Whether you know what changed or not, whether you meant it to change or not, sentiments behind you guys. Maybe your biggest competitor went under from some unexpected, happenstance. Even right now, GameStop's worth more than it was a year ago by a lot. If I'm the CEO of GameStop, now I know they announced they hired somebody from Amazon. It's in the past few days to an executive position of some kind. Okay. I'm saying to you, though, Josh, Is it unrealistic to imagine that GameStop would say, hey, you guys, guess what? We are absolutely blown away by the support that's come from the public. We have new wind under our wings than we've had in years. Yeah. Here's our new business model that we were afraid to try this whole time, but with your help, we can do it. Here's our GameStop branded Steam fucking streaming game console.
Right.
Here's our new, this, that, and the other. We are reinventing ourselves. We're going to go employee owned, stockholder, accountable, transparent, and we're gonna be worth it, you guys. We're gonna stay. You've given us this energy. You gave us an extra year. We're gonna do everything we can with that year. Hold the stock. Like, where's that announcement from those guys? What's stopping them from doing that?
Lawyers. You can be sued. Yeah. So you'll actually find a lot of CEOs telling people, like, publicly tweeting, like, this stock price is overpriced. Mm-hmm. It's too high. Mm-hmm. It needs to come down. So they'll do their own due diligence in that way. But I would agree with you that there are opportunities if they were to be able to have a turnaround strategy rather than becoming the next Blockbuster. Everyone thought Netflix was doomed when they were, still mailing out DVDs and going in debt for
some of us were subscribed back then, though, too. I bet you got a few DVDs at your house. Yeah,
absolutely.
Do you know I still have like 2? Never returned them.
I still have my Blockbuster card too.
That's great. That's awesome. Yeah, I still have like 2 Netflix DVDs in the fucking pouch. It's great. But yeah, so yeah, I mean, that's just it. Just to me, I'm looking for a response from these companies. Companies are always being, they're great, popular sort of consciousness punching bags. We can always, take a shot at a company. Oh, screw Nike. They build their, shoes in sweatshops with child labor. Oh, your iPhone was built with slave labor, da, da, da. I mean, it's so easy to just knock on companies. I would think companies would look for every opportunity to show their human side and the fact that they can be affected, by things that are happening around them and indeed to them, collectively and respond back. Wendy's, for example, famously has an amazingly hilarious Twitter account, that has practically, I would argue that their Twitter account has maybe saved that company from total irrelevance in large parts of the country anyway, and keeps people visiting them a little. It
brought attention to youth, millennials, and younger people who saw it as hip. Definitely.
There you go. Right. I mean, and Wendy's, of all of our current fast food pantheon, your Mickey D's and your Burger Kings and everybody else who's hunting for that burger dollar, Wendy's, they're kind of off the back. These guys still have baked potatoes on their menu. You know what I mean?
If you look at Jack in the Box, they kind of led that whole example. They did. Salmonella.
They did a great job with their marketing after the salmonella fucking.
And then Wendy's had salmonella.
Yeah,
and they had to be hip after that. And so, yeah, I think with the Jack in the Box thing of the $4.20 box they had in California to promote the legalization down there or whatever, that was a great promotion. But yeah, anyways, I digress.
No, not at all. So we got a couple places to go from here on this. I want to point out that, and this is something we talked about super briefly before going on. But I'll ask you this in the form of a question now. We're both old enough to have remembered the original Occupy movement in 2011 and 12. We're also both old enough to have been around. And as a matter of fact, we bought our home at in October of 2008. So we bought our home that we still live in today, right now, at the end of the very famous, some would say never fully recovered from, financial crisis of 2007, 2008, right? But and we'll go back to there in a moment, but I'm asking you, do you pick up on any of the same vibes I picked up with Wall Street Bets that sort of reminded you of Occupy, the original Occupy, the Occupy movement that everybody says had no clear defined goals, no real demands from society. And that's why, even though an extended protest that lasted for months in downtown Manhattan and was echoed in other cities all around the country, also for weeks initially, certainly here in Seattle as well, until all those demonstrations were quashed a lot sooner than New York. I think New York went on for almost 6 months before it was over. And they did this over a winter too. They started in September down on Wall Street in that park, right? Let me see if I've got, let's screen 2. Let's go Occupy movement. So what was the name of the park? I'm bringing up on screen really quickly here. The Occupy movement started.
Zuccotti
Park, September 17th, 2011. By the end of 2011, they had cleared most of the major camps. The last remaining high-profile sites in Washington, D.C. and London were evicted by February of 2012. Still, pretty gosh darn long period of demonstrating, protesting, disrupting, right? And no matter how it's been criticized over the years, I'm sure at this point history will remember that the sentiment behind Occupy was income inequality, nonstop wealth transfer from the middle class to the upper class of the United States. The stated demand from Occupy as of October of 2011, we come to find out, Josh, was a very aptly, or rather ironically named demand. Let's go to goals here, and we can see at section 66, they talk about, by late October, adbusters have been trying to rally it around a single clear demand for a Robin Hood tax, with a global march in support of the Robin Hood tax planned for 29 October. Robin Hood tax being a tax on the richest Americans and the richest corporations and the richest investment houses in our economy, the biggest players in our economy, which historically have found ways, it would seem, from, a person in my position in life to a lot of times really engineer their whole businesses around paying as little tax as possible. In some cases, paying none. In more recent years, we've all heard stories about like Amazon not paying any income tax, federal income tax, right, in our country whatsoever, right?
Boeing
getting
famously
millions
left
of dollars,
Washington State
right,
to not pay taxes in Illinois.
There you go. To threaten to leave us.
Well, their headquarters went from Seattle to Chicago so that they didn't have to pay taxes in Washington State.
Exactly. So they moved their headquarters out of our state to stop paying their own home state any kind of income tax whatsoever. Amazon.
Well, yeah.
And they also don't pay any of the federal government either. So, all right. So, fair to draw a line of inspiration from this movement back to Occupy? Is this is it an unwitting grandchild of it, do you think?
No, I think there's a direct tie back to it. They wanted to tighten the banking industry regulations, the high frequency trading, which is basically algorithmic trading to take pennies. Maybe you don't care that a penny was taken or added to your cost, but you add that to everyone who's buying all day long, and that's really what it is.
That penny was millions.
Yeah, they make millions and millions of dollars doing that every year. So that's their whole business plan. So I think you can look. There's a famous, or not famous, a viral letter that's going around where this guy said, "Dad, this is for you. I'm going to, crash this hedge fund because you lost your job. You became an alcoholic. You've never been the same. You're a broken man, and I'm going to do this for you, and I don't care what I lose." So Whether or not that's authentic or legitimate, I think there are people who feel that way. But I don't think that they're all alone. There are hedge funds actually making billions of dollars off of that trade with GME and AMC. So
So
it's not just individuals.
the bad guys in 2011, 2012, kind of the same cast of characters
Mm-hmm.
in 2021 right now. I kind of feel like that's fairly evident. I hope to hear other people talking a little bit more about that in the months to come. Personally,
Mm-hmm.
Something that I obviously got interested in at the exact same moment that I was getting excited about Wall Street Bets. And everybody, for those of you who are watching this, full disclosure, again, this isn't financial advice. I'm not a financial advisor. Josh is a great subject matter expert, but he's not serving as a financial advisor in this conversation.
I'm not even real. I'm a hologram.
Or any of you guys, right? We're talking about a amazing news story, a social movement. It's so much more than whatever it appears to be on the surface, as far as I'm concerned. But so full disclosure, I got involved to the tune of, under a couple of $100 in GME and AMC, but I got a few shares of each after the top on GME. So it had already peaked, was squoze, was choked off. And I bought it like the following Monday anyway, because I was like, whatever, I'm getting a little bit of this. I'm going to get my participation trophy, and we're going to do it. And a few days before that, I had gotten some AMC, the next most talked about company, and a much more affordable stock still than the GME. So just another one that, it's the only line of red in my little digital portfolio of everything else I've bought in the last couple of weeks. And again, everything very small positions, literally just to learn and to see what this is all about, right? What I also did, though, was, of course, Josh, I started looking at crypto, right? I'm like, oh, right, there's that Bitcoin still here. They never killed that, and it's worth $37,000 per
41,
Bitcoin?
41 this morning.
What even is that?
Everyone's using it as a store of value, which is pretty wild. When Mass Mutual, an insurance company who's conservative by nature, is allowed to do that by their board of directors, is crazy to me, because they don't like the U.S. Treasuries. It's not stable anymore when you're printing trillions and trillions during the quantitative easing. So where else are you going to put it? They don't really want to carry around gold bullion. So I guess they're just kind of throwing it into Bitcoin. So I find it amazing that it's become a store of value, but it's also because as the U.S. dollar is being printed rather, our purchasing power is decreasing. So it makes sense to me that people are looking at speculation, but also other forms of non-government fiat currency that they can get behind and believe in. So there's some altruism behind that, but then there's some
crypto is still another fiat currency, as far as not just as far as you're concerned. You would say anybody else presented with that statement who's in the know would have to agree with that. Is that?
Yeah, it's not backed by anything.
Right. That's what I thought. I mean,
when it's backed by the full faith and credit of the issuer, that's crypto. I mean, that's a fiat currency.
All right, everybody.
So it's not backed by actual gold, so it's not money. It's currency.
So we've got a fiat currency in the U.S. currency as well these days. All right. Our U.S. dollars are backed by the government's assertions and assurances that dollar is worth $1.
It's a confidence game. So as long as you have confidence that there's full faith and credit, but the faith is waning and credit is debt, so that con game is up.
Okay, and so let me ask you this, because this is something that's all over the news of the last few months, the last year or so. I know you've heard it. Tell me, is it true? Have we printed that much money in the last year? They're talking about, I'm hearing people say things like, 40% of all the U.S. currency in circulation right now was printed in the last 12 months.
I think it's 20%. I think one out of every $5 was printed in the last year alone. So in the first
that
200
still sounds
years,
like a lot.
It's crazy. It's a crazy amount, and that's why everyone's fleeing out of the U.S. dollar. Not only that, but it doesn't have its weight. The weight that held the U.S. dollar together was out in Saudi Arabia, the petrodollar. When you buy oil for with U.S. dollars, that was the required currency to have, and now you can buy it with whatever. So now you don't really have.
So the fabled petrodollars day is already done.
Yes, Obama
really, it's over.
It 5 years ago. Yeah, and so now the dollar isn't really going to be the world's reserve currency. It's just a matter of time for it to move. And in fact, it's already outlived its lifespan on average fiat currencies. Since 600 AD, when China first implemented, they've all failed at some point. US dollar is the longest one. This is the longest bull market in history. So yeah, I mean, just because we're in this bubble doesn't mean it's going to pop. It's not going to pop. It'll probably shift to China being the world currency, but I don't know if or the world's power reserve. But the currency might be a standard, an SDR, a basket of currency. So a special drawing right is what that's called. And it could be a collective global basket of fiat. Maybe a portion of it's backed by currency, don't know. But that's why people are jumping into crypto, because they don't trust fiat any longer.
Wow. So we've seen the Wall Street right now continues to go up while we're talking about all of this and acting like GameStop is the, linchpin on which the entire American economy is rotating. Obviously there's a lot more going on out there. But when the dollar seems to be in a downward trend that isn't likely to reverse for any reason that I can think of, or that you've mentioned already. You didn't instantly say, well, except for the fact that the dollar is going to always be here because of this. There isn't a because of this. The dollar looks bad. Crypto looks better all the time, right? And so is 2021 going to be a year where people see incremental evolution in that side, or you think we're going to see a lot more action in terms of expansion or adoption of not just Bitcoin, but its nearest, closest competitors, analogs like the Ethereums and things? Don't some nations like China, you just mentioned China, doesn't China have their own crypto that they just debuted and started implementing over there?
They did, yeah. They launched they launched a small amount of crypto, and then they're going to implement it nationwide. There's a couple other countries that have implemented digital currency. The U.S. is drooling over that idea because then you can have negative interest rates. You can charge people for their savings because there's nowhere to go. They can't raise rates any longer. They have to go negative. But you have a bank run. Washington Mutual is a famous case of that bank run. Within a weekend, $3 billion was wiped out. I
kind of remember that. Yeah, they were they more or less went out of business, right?
In a weekend.
They're just chased now.
Yeah, self-fulfilling prophecy when people are afraid that there's going to be a shortage and you run out and create a shortage. It was pretty unfortunate. But yeah, so with other countries creating a digital currency, that's an option, unless the only way to save it is to have it backed by gold at, either 100% or some point. But it's outside of that, you can't just keep printing. They'll probably print $7 trillion this year. That's my guess. The Biden administration's already got a $1.7 or $1.9 trillion package they're ready to launch right now. And that'll just be the first wave of 3 or 4 of those similar packages. They're
going to print more money for that, of course.
The velocity of money will take over the lack of the petrodollar effect. When everyone was using those dollars, otherwise inflation will come back home if no one uses those dollars. They have to use them up somehow Otherwise, inflation will be just like Russia when they were taking wheelbarrows of money in the 80s to buy toilet paper. You're seeing it right now. Beef jerky isn't expensive for any other reason other than inflation. Having to have more money for the same goods and services, like a house, your house isn't appreciating because it's worth more for any other reason than they're printing off money, and it's devaluing your dollar, costing more dollars to buy the same house.
To do the same thing.
That's why people are going to Bitcoin and crypto.
So I guess that may have to be, and that would be a great thing to come back and circle back around on, is, a conversation for another day would be, to what extent does crypto truly hold a better value proposition for the future than what we've got now? You know what I mean? And as tempting as it is to like drag you into another 20-minute chat about that very thing, I'll say that would be a great, place to invite you back for, Josh.
Yeah, a lot more coins are going to be taken off in the near future, so it'll be interesting.
A lot more coins?
Yeah. Different
as far as
Dogecoin.
Sure, there we go. So we've got Dogecoin about to take off from obscurity to it's already. I mean, I've been looking into how to play with that, right? But again, entirely symbolically. But that's where that's the reason why I drag you on, Josh, and because I know you think, we haven't tapped your waters at all today. I've seen flashes from you.
We have. I've got a bubbler
so many times. That's great. No, we don't have to sign off this second. I just don't want
we've tapped the waters. I got a bubbler in here. So
there we go. Tapped. Brilliant. I know you have an appreciation for some of the things that, the stranger places one could go with this. I've mentioned it. Ostensibly, it's a natural, organic grassroots movement on Wall Street Bets, but a cynic or a skeptic or a theorist might also say, do you really think, guys, these hedge fund boys haven't been hiring think tanks and consultancies for years to make reports for them, interesting reports called white papers about all sorts of different subjects and topics, including what's going on with the kids on the internet these days? Do we really think these guys couldn't have foresaw any of this coming and maybe weren't ready all along, including with being willing to get cut one time, real bad, and everybody on that side of the table sort of knew it. Hey, it's only a matter of time before one of us comes up on the wrong side of some real weird retail investing move that we didn't see coming. But it's all right. We'll weather that storm together. And when we do, we go to phase one of the new model, because some stuff's going to happen that's fallout from this, right? We've got the SEC promising to look into it. We've got companies like Robinhood with a little egg on their face, but who are going to come out bloodied and battered and stronger than ever. Let's face it, they're not done at all. No matter how many bad reviews were put up in the Google review store by disgruntled Robinhood investors, right, in recent days.
And deleted by Google.
Right. Deleted by Google, deleted by Apple. Like amazing collusion from, these baddies, these guys who are like both our Candyman and our disciplinarian, right? They can kick you off of Facebook. They can, not post your negative review about a company on the Yelp or the Apple store or the Google store in this case, to be more specific. But we've seen in the past how corrupt Yelp has been, and which led to their, large sort of discarding by a large part of society, especially the savvier parts of society. Like who's ever looked at a Yelp rating in recent years in any seriousness for any reason? It's just it's disgusting. You know what I mean? It's sad what happened there. And that's again, another great conversation. Like a person could have a whole talk about what happened with Yelp. Like, what did it mean to the human psyche. Like what was it an illustration of? Because it was a demonstration of a lot of bad traits on a lot of sides of everybody participating in the Yelp culture, including the company itself. So there's probably a documentary. Somebody's probably already got a movie out about that shit, I'm sure, right? But
there's a twist to this whole thing.
I wonder if it wasn't foreseen anyway, or accounted for. I wonder how long can we do this? Can we play cat and mouse with these guys as individuals that are still tapping into a group consciousness in the metaverse, in the internet? We know we're going to reforge those connections. If they kill Wall Street Bets, people will start another subreddit.
Right.
If they kick off all the investment subreddits, somebody will create another platform. I do realize that at a certain point, you're looking at the problem of having to build your own whole fucking internet just to get back out there into the world if they want to shut you down. But I'm here to tell you, Josh, I kind of think that we're in 2021 already, bro. How long is it going to be before somebody doesn't say, you know what? I am building my own internet and I'm going to give it to everybody too. And that somebody is going to be a lot of somebodies in a lot of different places at once anyway. Again, like whack-a-mole, again, like the fingers in the dike. I feel like I'm watching that group still grow. What is it? It was 8.6. It was 8.6 million today. I'm just like literally going to just refresh the tab and see if they are. But it's sort of plateaued a little bit there, and understandably. In Wall Street Bets, what you've got, things that are lingering effects of the action of last week are, that subreddit is now compromised. The very people who you thought you were talking about secretly in your private club 5 months ago when you were identifying GameStop, long before I ever got there, long before I ever heard about any of this. But when the community there was building the first blocks of this plan and putting it into action and investing the first money into that stock, they were by themselves largely. They were largely unknown at that moment, probably, or maybe not. I don't know. It certainly was allowed to go really far for something that was understood completely. You know what I mean? It looks like damage was done. It looks like points were, hit points were taken from the boss, creature. But I agree, it wasn't nearly enough, right? And now you've got a subreddit that doesn't have the same mojo it had a week ago, even though it's real big still right now. That 8.7 million might just be the peak of that particular subreddit group. Maybe the most iconoclastic and creative and interesting people that led some of the ideas and concepts that got this started in the first place have already moved on from that community, and everybody who we're hearing from in there are left behinds, just like us. The magic may already be gone from there, but I feel like hopefully it's not.
I think it's going to turn into a cult. Like you said, there's going to be people in New York with these shirts on, and it's going to be a brand that represents
Diamond Hands.
It's going to be the brand new, Occupy Wall Street. Like that's what their brand is. And so whether or not they were used as a tool is beside the point. I mean, there's rumors that hedge funds came in and were whispering to Wall Street Bets about this play and gave them the idea. There's nothing new about, these most shorted stocks being the greatest short squeeze play. But when you get, retail investors in like Wall Street Bets to amplify that, it just makes that return that much more.
Wouldn't that be just the richest? Wouldn't that be just the richest irony of all? Inception, it was just one more example of standard hedge fund manipulation of the other hedge funds and getting over on the others.
And then blaming it on the retail. It's kind of like when the kid punches somebody.
Who took the hit? Melvin took the hit or Citadel took the hit?
Melvin had to get reinvested from Citadel.
There we go. So, and Citadel, though, not Melvin, but Citadel backed Robinhood, right?
Yeah.
Or was it Melvin that backed Robinhood?
I think they both did. And
And will both
Citadel's
of
got a
them
shady
probably have
history.
had privy to all the same information?
Right.
Right. Yeah. And by that, we mean not just like publicly available, same information we all see, but you mean like the fucking good data that Robinhood was getting all day long from all their retail investors in exchange for their free and low.
Yeah, front running is technically illegal. Front running is the act of getting in front of somebody's trades and trading in front of them and making that, 1 cent per trade, whatever. That's not legal until like Robinhood sells their information. You and I, if we were on Robinhood trading, what happens is Robinhood will sell that to Citadel in advance, and then Citadel trades in advance on that. That's how they make their money. So it's illegal for them to do it.
That's called front running. That's a great new term I haven't heard before. I love it. We've all learned about shorts in the last week or so, right? And, we've learned a little bit about options that, I didn't understand before as well. And then, so front running, insider trading, that's what it made me think about. Right.
Yeah, Warren Buffett. That's how he makes all of his money. In 2008 and 2009, the government went to him and said, "Hey, here's a whole bunch of info that no one else can have. We need your money. Will you give us some investment?" And he pours over all this data that no one else has access to. And he's like, "Sure, here's $1 billion, here's $1 billion, here's $1 billion." And no one else can have that access. So people are like, "Oh, Warren Buffett, he's a great investor." No, he's not. He just has access. He's got access that nobody else does. He's legal insider trading.
I'm hoping that we're living in a time where we're all about to have, with the computers we already own, Josh, like the systems and tools and a robust, unsquashable public consciousness that rivals this, private sandbox, ivory tower, pay millions of dollars to a consultancy to make a white paper on how to manipulate people on the internet, which could be, and that's a really big leap of speculation that, I'm sort of very poorly stringing together there and being very conscious of stopping very short of going any further with it than that, because I really don't need to. To me, this is the time for folks to keep going, do it again, be that goofy mean. Oh, we can do it again.
I think with a global shutdown, you do have a lot of people who are looking at, being forced to not earn an income and then having to stay home.
Those narratives on MSNBC and everywhere are true. Yeah, people are home. Yeah, they're looking at the internet more than they should, and they're getting crazy ideas about stocks. But like that though isn't a bad thing, right? Though when they brought it up at all the morning shows in the world, it was really characterized as an unhealthy,
Right. But what I'm saying though is being forced to stay at home and being forced to not work is pissing people off. And then seeing how Wall Street is being given this privilege that no one else has, that combination is going to be something that puts a crack in the system that I don't think you can duct tape.
There we go.
So I think what we're seeing is a new form, new revolution, new Occupy Wall Street that is going to manifest, whether quick or fast. It could be 2 years like last time. Could be 2 months. I don't know. But I think we're going to see something change from the people, from the ground up grassroots movement.
God, I hope so, dude. I really do. I don't know, where it goes from here next. As far as that goes, I know for me, the investments that I've made so far have been token investments, but ones that I'll hold till this is a boring subject, till we're talking about it, a couple of years from now, and it's maybe done nothing since then. I hope that 10 other things have come along since then that make me take token losing positions in them too. I really do.
It kind of started with Tom's shoes, did it not? With the whole social responsible investing. If you buy Tom's shoes, he'll give one for free, and people like that, so they started investing. Now you have, your government and environmental.
Is Tom still on the good side of everybody? I thought they also got.
I'm just using that as an example of something that went viral back in the day because they were doing good. I think that's going to be even more important moving forward. There's going to be a lot more social responsible investing, social environmental governance, and I'll just a lot more people who want to do good because they're looking at all this greed and they're like, well, what's the point?
Right. I mean, I'm looking for it. People have been, I think, yes, definitely trying to find ways to have their cake and eat it too, insofar as we still want our iPhones and our nice clothes, and we still want to live a semblance of the lifestyle we've come to live. But it does get to be a bummer when once you're conscious enough of a certain number of those kind of things that we've already alluded to earlier in our discussion, just the downside of the fun gadgets and clothes and things that we all kind of love and rely on and like to, still find excuses to spend our dollars on. Every chance we get to feel a little better about, this is 100% hemp. It came from a fucking, farm up in Eastern Washington from the test program or whatever. And you can say it's hyper local, whatever, this, Everybody, any way we can feel a little better about one thing that we're doing is a nice feeling. And companies have been rewarded richly for very token amounts of that in their corporate DNA. You know what I mean? Already. But the more they make it real and the more they weave it into their actual mission, not just the pretty mission statement that goes up on their website, but what their legacy is out in the world, how they treat their employees. That's why I said I wish these GameStops, these AMCs would call a press conference, say, thank you, everybody. We're going back to the drawing board. We'll get back to you in a month. But
you can't incite collusion. Great. That's also illegal to incite collusion.
I wonder though, it feels like everybody else finds ways to get their message.
You can go on CNBC and advertise. That's totally legal, but then when you go to the people and you try to aggregate the people and not the businesses, well, then you can't do that. There's two different rules out there. Where's
the GameStop social media account? They exist. They got to have some leeway to say something.
I don't know. I know you
said the lawyers, right? The lawyers.
A lot of disclosures and disclaimers and legal stuff. It's really hard for them to say anything without getting sued.
Yeah. Well, I guess we're all going to get sued sometime.
Yeah. I mean, I think I threw down 100 shares just to try and break Citadel Capital myself, So I'm
good job.
I'm all for it. I think people should try and take a look at what's going on with Wall Street Bets. I think everyone should learn how the market works. I don't think people should just be day trading because I think that's crazy, but everyone should know how the market works because then it'll give you the real idea of how the market, this is just
how the market works by participating to some degree, right? You do think people should invest for themselves, right? And they should be empowered.
God, right now, I don't know what you would invest in other than precious metals, like physical gold and silver. This is an investment advice, but I'm just saying everything is so bloated right now. I don't know, from housing to the stock market, what would you invest in with, I don't know. It's crazy.
That again would be easy to sit here and spitball about that because and again, a great topic for another conversation, but some might say, well, we've seen mom and pops going by the wayside left, right, and center in the last year, but what's Walmart's stock been doing? What's Amazon's stock been doing? What's Costco's stock been doing? What's any analogs to those companies in other markets in the country? to that been doing, I would wager that every single one of them is up significantly, even in the past year, and probably analysis of those companies would put every one of those that I just mentioned as the parlance is, right, a solid buy right now from most advisors. Why wouldn't you invest in Costco right now? Why wouldn't you invest in Amazon right now? Even with Jeff Bezos retiring, in a sense, when a person like him, supposedly, we all know, first off, retiring doesn't mean retiring. He's retiring from one role and going to keep significant influence on the company from 4 or 5 different hats that he'll still certainly wear and draw paychecks from. But when that guy moves out of the way and says, I'm not CEO anymore, he also frees up that company to do different stuff than they ever did before when that person was the CEO. They get to try new stuff and go different places. They've already announced video games being a focus. They've, Amazon hasn't hit the top as far as I'm concerned until the self-driving, drone vans are rolling down the block and catapulting, lobbing packages into my front yard. And they're coming, but they're not here yet, but they're coming, right? So Amazon's not at its top. Yeah. So, all right. I love you, bud. I want to let you get to the rest of your afternoon. Let me put one of your little tickers up here. Let me put a couple of them up if I can, so everybody has. Let's do this one. We got 2. Oh, they're both the same kind. So there we go. Let's remind everybody. This is Josh Kincade. He's been my guest today on the podcast. Josh, thank you for each of our conversations. I always enjoy and look forward to joining you over on the Talking Hedge, which is Josh's podcast and YouTube channel, excuse me. But I do believe you can find the Talking Hedge in almost every podcatching app. Isn't that correct, Josh? You're certainly in Apple Podcasts and Google and, your Spreakers and things like that, right?
I think I'm everywhere. If I'm not, if I'm not somewhere, let me know, and I will.
Do you like people to engage you on YouTube? Do you where's your favorite place for people to get? You want them to hit you and review you in the Apple Podcast Store and subscribe to the Apple Podcast first and foremost?
Yeah, or Alexa.
Bottom of the page right here. There you go. If you got your government spy robot installed in the living room or bedroom, go ahead and ask it to play the Talking Hedge for you.
Not me.
There we go. See, me either. I was in there for a while, Josh. We were talking about that.
I beta tested it. My wife works at Amazon.
There we go.
We pulled it and was like, get that thing.
You know too much. Too much. There you
get
go.
out of here.
Yep. Amazing. That's cool. Well, that's a connection that we had. That's great stuff. All right. Well, guys, thank you. Thank you for joining us today from the Talking Hedge, Josh Kincade. Why don't we, without putting a hard date on it, I hope you'll agree to come back and talk to me maybe one more time about this Wall Street Bets. We'll keep watching it together and see where things go in the next coming weeks. I mean, I think we've got the potential for some interesting developments to happen in this next week alone, in the wake of the action this past
week. They haven't even started the Senate hearings yet. It's going to be interesting.
Right. And we've got deep effing value supposedly potentially having to go to talk about it, right? Mm-hmm. In front of the Senate. So craziness. People from the internet needing to be summoned to the Capitol to talk to them about what's going on Wall Street.
I hope they read all of their handles too. That's going to be great.
It'll be great. Oh my gosh. All right, Josh, let me see where my controls. How do I wrap it up here? I think I got a button over here. Everybody, I'll be participating in the premiere of this. I don't know if Josh will be able to join me at the time, but hopefully I'll be talking to some of you guys in the live chat when this goes out. Right now it's planned to go out tomorrow afternoon on Sunday, right about 4:20. So maybe, Josh, if you have the time on Sunday afternoon and you want to get safe with us, you can join us in the live chat. This will go out on YouTube tomorrow afternoon. Josh, thank you once again, everybody. You guys are great. I love it when you join me for events like this. And this was a great, super conversation. I learned a lot from you today, Josh. And I know I didn't even exercise your brain too hard, so we might have to go harder on some topics next time and get into the nitty gritty on some of these matters. But everybody, you know what to do between now and when I see you next. Remember to smoke indica and do shit anyway.
That's right.
Later, Josh.
Thanks.
All right. Bye-bye.